Hey everyone, and welcome back to Talk Tickers. We're diving deep into Crocs Q4 2024 earnings call today.
Yeah, and it's it's a bit of a wild one.
It is a wild one.
Yeah.
So to set the stage, Crocs ended the year with a record $4.1 billion in revenue.
That's right, a solid 4% jump from last year.
Not bad at all. And their adjusted diluted EPS came in at $13.17.
Which is a pretty impressive 9% increase. Basically, for every share of Crocs stock out there, they earned $13.17 in profit.
So people are definitely still loving those clogs. But as we dig deeper, we see two very different stories here.
Absolutely. You've got the core Crocs brand just killing it globally.
Like rock stars.
And then there's Hayydude, their more casual brand, which is going through some strategic adjustments.
Okay, let's start with the good news. The Crocs brand, they pulled in $3.3 billion in revenue, a 10% increase year over year.
Yeah, and their international sales were particularly strong, up a whopping 19%.
Wow, 19%. So what's driving that kind of growth?
Well, they're really just starting to tap into these massive markets like China. Think about it. Their market share there is only about a quarter of what they've achieved in the U.S.
So the potential is huge.
Yeah.
It makes you wonder, what is it about Crocs that's resonating so strongly in these diverse international markets?
It's probably a combination of things, the comfort, the versatility, the fun designs.
Yeah, they've got that kind of quirky appeal.
Right. And they've been really smart about adapting their marketing to different cultural preferences. For example, in China, they've collaborated with local designers and celebrities.
So they're not just trying to force the same message everywhere. They're really thinking strategically.
Exactly. Now, let's zoom back to North America. Crocs had its 7th straight year of growth here, but things are slowing down a bit.
So are we reaching peak Crocs in North America?
Well, it seems like they might be hitting a saturation point, at least when it comes to their core clog styles. The challenge now is convincing North Americans to wear Crocs beyond, just casual settings.
So beyond the backyard barbecue.
Exactly. They're working on expanding into new product categories like sandals, but it's still early days.
All right, well, we'll have to see how that plays out.
Yeah.
Now, let's switch gears to Hayydude. Remember last year, everyone was talking about their slump? Well, Q4 brought some good news. Revenues were flat year over year, which is a sign that maybe things are turning around.
Could be, yeah. And their direct-to-consumer channel actually grew by 7%.
Oh, wow, that's significant.
Yeah, it was their first positive bump in 5 quarters. They're attributing this growth to new product launches and strategic marketing.
Especially on platforms like TikTok, right?
Yep. They're really going all in on building a strong community, especially among young women.
Smart move, considering their target demographic.
Right, and we're already seeing some positive results. For instance, in Q4, they saw a 160% increase in new female customers aged 18 to 24.
Wow, 160%. That's incredible.
Yeah, they're definitely doing something right.
So things are looking up for Hayydude, but there are definitely still some challenges ahead.
Oh, for sure. Let's talk about those new tariffs on goods imported from China and Mexico. Those are a bit of a curveball.
Yeah, those tariffs are a big deal. They're estimating an $11 million hit to their gross profit.
It's definitely a blow. But here's the interesting part. They're still committed to maintaining a 24% operating margin despite these headwinds.
That's ambitious. How do they plan to achieve that?
Well, they're looking at a combination of strategies, streamlining their operations, finding efficiencies in their supply chain, maybe making some strategic price adjustments.
It'll be interesting to see how they balance all of that. It's a tough balancing act for sure. So they're facing those external pressures like tariffs and internal challenges with Hayydude's repositioning. How are they thinking about their overall strategy?
Well, during the call, Crocs laid out these 4 key strategic pillars for their core brand, kind of like their roadmap for success.
Okay, I'm listening. What's the plan?
First up, they're doubling down on what they're known for, driving brand relevance by constantly iterating on those iconic clog designs.
Yeah, makes sense. The classic clog is what made them famous.
Yeah.
Don't mess with success, right?
Right. It's still a huge part of their success. I mean, think about it. The classic clog was even featured in an exhibit at the Museum of Modern Art in New York City.
Oh, wow. I didn't know that.
Yeah.
That's pretty cool. But they can't just rely on clogs forever.
Exactly. And that leads us to their second pillar, gaining market share beyond just clogs. Introducing products for new wearing occasions like sandals to broaden their appeal.
Right, because people can't wear clogs for every occasion.
Exactly. Their third pillar is all about leveraging disruptive and authentic marketing on social media and digital platforms. They're really good at going viral, especially on TikTok.
Yeah, they've definitely mastered that. Creating a real sense of community around the brand.
Absolutely. And finally, their fourth pillar focuses on global expansion, continuing to gain market share in new countries around the world.
Which, as we saw, is clearly paying off with their international growth.
Okay.
Okay, so that's the Crocs brand. What about Hayydude? What's their strategy?
Yeah. They've got three main pillars. First, they're really focused on building that strong brand community, especially among young women, but they're doing it carefully, making sure not to alienate their existing male customer base.
Yeah, that's a tough balance to strike.
It is. They're using different marketing approaches for different demographics. For example, their campaigns targeting young women might feature female influencers and highlight styles that are more feminine.
While their campaigns targeting men might focus on different things.
Exactly, like functionality and outdoor activities.
Makes sense. A more tailored approach.
Yeah.
What's their second pillar?
It's all about their core products, the Wendy and Wally styles. They're focusing on strengthening those and then expanding from there.
Smart move. Build on what's working. And their third pillar.
Stabilizing and accelerating growth in North America while laying the groundwork for potential international expansion later on.
So a more measured approach compared to Crocs' aggressive global push.
Exactly. It's about solidifying their position in their core market first.
Okay, I'm getting a good sense of their big picture strategies. Now let's get down to the specifics. What product wins do they highlight on the call?
On the Crocs side, their classic clog continues to be a top performer, especially internationally, but they've also seen great success with their Eco Clog.
The Eco Clog.
Yeah, it's made with sustainable materials.
Interesting. It shows that sustainability is becoming more important to consumers.
Absolutely. And on the Hayydude side, their Wendy slipper was a standout performer during the holiday season. They actually sold out completely in just 2 days after launching it as a direct-to-consumer exclusive.
Wow, 2 days. That's impressive. What drove that kind of success?
Well, they ran a really strong social and digital marketing campaign featuring actress Sydney Sweeney. They also saw great results with the Austin Lift and the Paul franchises, which they plan to invest in further.
So some real momentum there. But they're also facing some headwinds, right? We talked about the tariffs, but what else are they contending with?
Well, they're seeing increased costs in things like marketing and talent acquisition, which is putting pressure on their margins.
Yeah, those are pretty common challenges these days.
They are. It'll be interesting to see how they navigate those hurdles while still maintaining their commitment to that 24% operating margin. Now, let's look at some of the key financial highlights from the call numbers time.
Hit me with the numbers.
Okay, so let's start with gross margins. Crocs reported adjusted gross margins of 57.9% for the fourth quarter.
So for every dollar of revenue, they kept almost 58 cents after accounting for the cost of goods sold. That's pretty good.
It is. And it seems like their efforts to improve efficiency and pricing are paying off. The Crocs brand saw a particularly strong gross margin of 60.9%.
Impressive. What about Hayydude? How did their margins look?
Their adjusted gross margin came in at 47.7%.
Still a healthy number.
Yeah, up 220 basis points year over year. This was driven by fulfillment efficiencies and higher average selling prices, partially offset by some product cost increases.
Okay, so a positive story on the gross margin front for both brands.
Yeah.
Now, what about SG&A? That's always a key area to watch.
Right. Adjusted SG&A expenses, which include things like marketing and administrative costs, increased by 23% year over year for the quarter. This pushed their SG&A rate up to 37.7%.
That's a pretty big jump. What's behind that?
They attributed it to continued investments in their direct-to-consumer channel, talent acquisition, and marketing initiatives.
So they're investing for future growth.
Exactly. Now, for their operating margin,
The bottom line.
their adjusted operating margin for the quarter was 20.2%, which is down 390 basis points compared to last year.
A noticeable drop, but remember, they're projecting to maintain a 24% operating margin for the full year.
Right, and that's after taking into account the expected impact of tariffs and foreign exchange. It's going to be a balancing act for sure.
It will. Now let's move on to earnings per share.
Okay. Adjusted diluted earnings per share decreased by 2% to $2.52 for the quarter.
A slight dip, but not bad considering everything.
Agreed. And there were some other positive moves on the financial front. They repurchased about 2 million shares for a total of $225 million during the quarter and also repaid $75 million of debt.
Smart moves, especially given their strong free cash flow generation.
Exactly. Now let's look ahead to their guidance for the full year.
Okay, what's the outlook?
They're projecting enterprise revenue growth of approximately 2% to 2.5% on a reported basis, but that includes an anticipated $60 million headwind from currency fluctuations.
So a pretty conservative outlook.
Yeah, but considering the global economic climate, it's understandable. On a constant currency basis, they expect revenue growth to be a bit stronger, in the range of 3.5% to 4%.
Okay, and what about the breakdown between Crocs and Hayydude?
For the Crocs brand, they're expecting revenue growth of around 4.5%, primarily driven by international sales. They're projecting North American growth to be slightly up for the year, while international growth is expected to be around 10%.
So Crocs is still the main growth engine.
Yep. Now, for Hayydude, they're projecting revenue to be down between 7% and 9% for the year.
Okay, so still some work to do there.
Yes, they're not expecting wholesale growth for Hayydude in 2025, as they focus on stabilizing the brand and driving direct consumer sales.
What about their margin outlook? What are they projecting for gross margins and operating expenses?
They're projecting enterprise adjusted gross margin to be down slightly for the year, due in part to the impact of tariffs and currency.
Okay, and operating expenses.
Yes, they expect adjusted SG&A expenses to grow in the mid-teens during the first half of the year, but they're projecting that growth to slow down to the low single digits in the second half.
Okay, makes sense.
Right, and they're planning to increase their marketing spend to 10% of revenue.
So despite these cost pressures, they're still aiming to maintain that 24% operating margin.
Exactly. It's ambitious, but it would show their operational discipline.
All right, last but not least, what are they projecting for earnings?
They're guiding for adjusted diluted earnings per share in the range of $12.70 to $13.15 for the full year.
Okay, so potentially a slight dip from the previous year, but still pretty solid.
Yeah, and it's worth noting that this range doesn't take into account any future share repurchases, so there could be some upside potential there.
Okay, so a lot to consider. But overall, it sounds like Crocs is in a pretty solid position. They're navigating a complex global landscape, managing multiple brands, and continuing to invest in growth.
Agreed. And they're also committed to returning value to shareholders through dividends and share buybacks.
Now, before we wrap up, let's have some fun with our This Is Not Financial Advice segment. What outrageous but plausible trade idea have you cooked up for us today? All right, lay it on me. What's the outrageous but plausible trade idea today?
Okay, so get this. What if Crocs, they just go all in on this athleisure trend with wait for it, Crocs branded workout gear?
Whoa, hold on. Crocs workout gear.
Yeah.
You're talking like leggings and sports bras with those signature ventilation holes.
Exactly. Think about it. Athleisure is huge right now and comfort is king. And what's more comfortable than Crocs? They could market it as, pre and post workout wear, perfect for like slipping on after a sweaty gym session or running errands.
I mean, it's definitely out there. But it's not totally crazy. Remember, Crocs themselves were once considered kind of a joke, and look at them now.
Exactly. It could be a genius move to tap into a whole new market and attract, a younger demographic.
All right, I'm kind of seeing it, Crocs athleisure, come into a gym near you.
Oh.
But remember, everyone, this is not financial advice.
Definitely not. Do your own research. Talk to a financial advisor before making any investment decisions.
That's right. Always good advice.
Yeah.
Well, that's all the time we have for today. Thanks for joining us on Talk Tickers for another deep dive into the world of earnings calls. We'll be back soon with more.